Alrighty, how are we going, everyone? Who have we got? Can you guys hear me? Thumbs up if you can hear me.
Yep, I got you.
Hey, buddy. I just checked into New York here for a bit. Got some exciting things going on as we try and make the protocol more institutional friendly. Lots of efforts underway right now. Um, we're in a really good position to make. A year ago, we weren't very convincing with the integrations and the roadmap and whatnot, and it was still kind of going through stability concerns. 2 years ago, it was chaos. 3 years ago, there was nothing, right? But over the last 6 months, as we've seen these integrations come online, we've, from my observation standpoint, we can actually see that the protocol has Pareto dominance of these on-chain flows, and you know, and as you know, with these wave of integrations coming down range, it's not only has Pareto dominance today, but it will have Pareto dominance for the foreseeable future. We all know centralized exchanges are going on chain. They've all got their wallets, they've all got their L2s, but centralized exchanges are only concerned about their own users maximizing their own L2s. Like take Coinbase, for example. They've got a huge user base, 100 million users. They've got Base Chain, which they make a lot of money from, and they've got the Coinbase wallet. So their big job is trying to get their 100 million users on chain where they can make so much more margin from the user base. Same with Binance, same with OKX, same with Crypto.com. Kraken's got an L2 soon, etc., etc. So all these big players are going on chain, but no one's treating the cross chain space. Like how are these users moving between these kind of L2s and L1s? But also not only that, but we see Web 2 companies going online. Robinhood's going on chain with the Robinhood wallet. Telegram, right, with the not only that they've got an L1, but they've also got a wallet. Proton Mail has now gone on chain. So we can see centralized exchanges going on chain, Web 2's going on chain. Now, the third wave that I can see is AI is going on chain. Like I tweeted yesterday that this is first protocol that is now using agents, these AI agents, to pay humans, and it's all going to be done in crypto. So AI will definitely be on chain. And lastly, we all heard Trump's speech from 2 weeks ago, a week ago. There is a big movement to put traditional finance on chain. We've got the Bitcoin ETF, we've got the ETH ETF. Obviously, Solana ETF is going to be next, and so the future is multi-chain. But who is treating the multi-chain environment? There's only one protocol really giving it a best shot. That's THORChain, and it's got Pareto dominance today. And we all know over the next 10 years, this thing's going to 10x. The whole market's going to 10x. Everyone's going to go on chain. So who's going to capture the majority of those flows? So if you go back 2 cycles ago, Binance was the power broker. Binance controlled all the flows, all the users, the brand, right? And unfortunately for Binance, they've been regulation and like the regulatory environment has kind of squeezed them hard and opened up margins to other players like Coinbase and Kraken and OKX. Is the protocol that's already on chain that already has all the infrastructure. That's THORChain. So it's the perfect opportunity today to make Rune institutional friendly and package it up as if you want to share of this power broking, cross chain, multi chain Pareto DEX, now's the chance. And like it's wild to me that the asymmetry of information here is so apparent. It's obviously reflected in the price, and it's kind of my job to like make it less asymmetric. So that's like a little bit of a segue in to what I'm doing in New York.
Nice. What's up, JP? Yeah, we'll be meeting up later. We'll meet up and grab a coffee or whatever and discuss more of all these interesting ideas. I think when you walked in the door at BTC conference at the house, the Nine Realms house that we were staying at, you just immediately came in with like 5 new ideas. That's why I love. That's why I love working with you. Love what I love about working with you because it's just like I'm like, yeah, man, we have almost got Solana. It's almost there, and it's like 5 more things. Like there's endless things. Every time I think that we're starting to reach a point where it's like, oh, great, We're starting to ossify the protocol. You guys have probably heard me talk about that extensively because it's always been a wish list item, but there's always more interesting wish list items that come up. Like there's always more innovation to be done in this space, and that's what's so fun about working in this on this project especially is like it doesn't feel like we've completed everything yet. It still feels like we're discovering new primitives like trade accounts. It took us like 3 years to come up with what could have been like the absolute simplest primitive to add from the beginning. Like it was not apparent to us then, but as the market grows, as the use cases grow, as we see users using the protocol in the wild, that also informs our roadmap as well. So I think in addition to having that Pareto dominance, we also have a 3-year running head start where we've actually been able to see how people want to trade on chain, cross chain, and we're able to make more informed product decisions about how people use our app, so we can offer the best liquidity products, we can offer the best swap products. So I think just we have such a head start in this space, and I think we're really making the best of it. So I would
Yeah,
love to.
absolutely. Yeah, and I agree with you that ossification is an important uh, direction, but there's just so much entropy with running a multi-chain DEX. Like the chains around us are like churning. Telegram was nothing a year ago, but now it's like, holy crap, we do not want to miss the Telegram boat. And it's like a new architecture, it's a new curve, it's a new ecosystem. So like, how do you ossify a protocol that's got to respond to the entropy of the ecosystem around it? There's like this kind of bit of tension there. Like we ossify the primitives, but we can't really ossify how we connect those primitives to the ecosystem. And like it's such an obvious bet. Like we know the future is multi-chain. We know the chains are just going to churn. The second Apple come out with a wallet and L1, they're going to use, or like they're going to like just completely churn out everyone else because everyone's going to move to this Apple chain. Like that's obviously a fanciful idea, but it could happen. So then the protocol needs to respond to that not quickly, but respond to it in a time frame. So we have to respond to the entropy around us. But also, all this is so new. Like threshold EC DSA is like so new. We don't even know the limit of what threshold EC DSA and these signing curves can do. On-chain liquidity pools are so new. We don't even know, like Uniswap for like the last 5 years have unveiled a new protocol 4 times already, about to release Unity 4. We
Yeah.
don't yet know the best solution for on-chain liquidity that factors in all this entropy, and we need to just keep optimizing forward. So there is a bit of tension there, like do we ossify, do we keep building? But we do know that if we don't stay in the arena and keep solving and optimizing, then there is a chance we will lose our lead. So that's why it's necessary to balance the two out together.
Yeah, I agree with you, and it's taken me some time to get there on that philosophy. Like I think I've been beating the drum of ossification from the time I joined the project, basically because I joined straight away when we had first gotten hacked, 2.5 years ago, and so I was just like, oh shit, how do we lock this thing down and make it make it function, make it safe, and I feel like now that we've established that, it's not like we're going to change our philosophy, but I think. And that's something that was interesting that you and I discussed was like in this next chapter, is there a way that we can abstract away the risky parts of the platform from the parts of the platform that have already ossified? So I would love to see new features like, if we were to do something like concentrated liquidity or liquidity auction, which is another idea, you discussed with us. But if we were going to implement something like that, do it using, COSM WASM and a trade account like primitive, where the contract itself is somehow paying fees to the node operators, and the node operators can basically decide, maybe how much that fee is for themselves, or some way of, segmenting the system so we don't have this waterfall like development structure where it's like JP comes up with a really good idea for a new economic primitive, Nine Realms, or any of our other individual contributors implements it, and then there's this whole lengthy review process where we have to get THORSec on board. Like anybody should be free to just develop. Well, I'm not saying anybody should be free because how Cosmos does smart contracting is sometimes permissioned in some ways, and there is a benefit to doing that. But I think overall, like forgetting all of those implementation details, I think now would be a good time to start investigating how THORChain could build its own smart contracting system and become a truly, implementation agnostic, credibly neutral, like cross-chain infrastructure. That was always been the goal. That's what I want to see, and like I think now is a good time to start exploring that. Um, Obviously, we have a ton of other stuff in flight, which we can talk about
Yeah,
today.
just on the Cosmosm, the reason why THORChain doesn't have MEV is because it's able to precisely assess the profit margin of every single transaction and share it equally between nodes and LPs
Yeah,
in a way that doesn't create MEV. If you create this layer on top and let you basically lose the initiative and you can't assess the profit margins captured in every single transaction. So you are going to introduce an environment for MEV. So that's only one factor to bring in. But I do agree, like Cosm wasn't on THORChain, using trade accounts or some other primitive like that is an interesting idea that we can generate more exploration, and anything that works, maybe we could bring back into the core protocol layer,
yeah.
et cetera, et cetera. So
That's a
yeah,
good point. I think I would say you gain the initiative, but you lose efficiency. We are more capital efficient today, but we could probably move faster if people could just write a smart contract and deploy it rather than having like the dev team build every single feature on THORChain. But I get what you're saying. That also creates a fractured liquidity. So yeah, it's super interesting.
yeah, absolutely. So on to RunePool. So what is RunePool? We've been kind of exploring the idea of what divine liquidity means. Dual LP is a primitive introduced way back in 2018 with Uniswap and the very first version of THORChain. But it's quite easy on Uniswap because you just do a single atomic transaction and the smart contract sweeps your transaction, your balances in and single at the correct ratio and deposit in the pool and away you go. But on THORChain, you've got to have two separate wallets, two separate chains with different like confirmation speeds. You got to handle the case where like you drop one side and it puts in a pending, and then obviously it gets a little bit crazy. So the user experience of attracting liquidity THORChain from a dual LP multi-chain environment is just like 10 times more complex than Uniswap or even MetaMask. And so we've been trying to like address this and understand that if we want to bring 1 million Bitcoin into the protocol from 100 million users, what does that look like? Can we bring 1 million Bitcoin to the protocol by just GLP? Well, we tried. We're exploring. We don't yet know the correct answer for that. We add features that try and bring TVL to the network. The protocol only makes money on its L1 assets. It does not make money on Rune. Like that should be like the base level of understanding that we work from here. The protocol does not make money on Rune at all. It has to attract external L1 capital to then monetize that. So that's the idea with all our efforts is how do we bring more L1 assets to the system? Like because we can only make money on the system, and unless we're making money, the protocol is like unsustainable and useless. So that's RUNEPool.
Yeah, I'll jump in here with some stats because ever since THORSwap, we launched the actual protocol side of RunePool last week with the 134 release, and it took a little while like to get a UI to actually add it to their UI. But THORSwap recently released their RunePool UI, and as of right now, there's 683,000 rune pooled right now, which is quite a big number. That was a big leap up from last week. And they're all sitting right now at, let's see, right now they have earned about 12,000 rune in positive P&L, and that can obviously be attributed to the drop in rune price over the last 24 hours. Basically, like you're participating in POL, and the value of like basically POL earns more P&L when there's volatility in the markets. So regardless of which direction it's going, but like I don't know, Tyler, do you want to jump in with this one?
Yeah, sure. So like you're a dual LP, but you're only providing the Rune side. And when you're an LP, you're always selling the strong asset and buying the weak asset. So when Rune goes down, RunePool is essentially just gonna not print, but it'll print a bunch of Rune into your position basically. So like LPs who have entered over the past like day, obviously there's been a market drop in the past day, which is what brings these numbers. But some of the LPs are up anywhere from like well, pretty much all of them are green, I want to say, and then a lot of them are up anywhere from like 1 to 2% on their entire position in one day, which is pretty crazy. And obviously, that moves with prices, right? So rune goes up, and then you're selling some of that rune to buy back the other assets in the pool, and you're exposed to a bunch of different pools when you're in rune pool. So like a lot of it is actually AVAX and Bitcoin Cash right now, and the reason that is that's just because that's what POL has entered into. It just hasn't had the chance to enter any like the Ethereum pool, for example, or it actually exited a lot of its Bitcoin position. So since the POL position like logic has kind of changed, that'll be changing in the future. But right now, you're pretty diversified between a good number of assets and a bunch of different pools. So you're kind of exposed to the different prices of half a dozen different assets in size rather than picking just one asset to enter into an LP with. But just keep in mind that like if you enter, your principal fluctuates in value based on like how the prices perform, but you're always gaining fees the whole time. So you're gaining fees when someone does a swap in any of the pools that RunePool is entered into.
Yeah, yeah.
Yes.
It isn't. Go ahead.
Basically, the way you can the basic way you can think about RunePool is you are earning the aggregate yield across all the pools pro rata to the external L1 demand of those pools through the synth utilization. So over time, as we make that POL change, Pluto, uh, as the system onboards L1 capital, the external L1 demand for the assets in the protocol itself will be reflective in the overall POL position. At the moment, it's kind of skewed in the direction of the smaller pools with that, like AVAX that went on crazy runs and caused it to pull in POL. But over time, your room pool position should just become like a giant ETF of all the in-demand L1 assets, and you earn the aggregate yield of all those pools, but also you're exposed to the aggregate IL of those pools. And the aggregate IL should always be less than the individual IL of any single pool. The other thing that kind of factors in is the synth leveraging. So there's this little characteristic where as Rune goes down in value, it gains back Rune from the due IL, and so your Rune principal does go up in value. And as Rune pumps too aggressively, your Rune principal will drop. But over time, that's why the initial commitment period is 90 days. We don't want mercenary, flighty, nervous capital. Go and room pool if you're going to be in it for 2 or 3 years. Simple as that. Or like at least a year. Because over a year, you should just be earning the aggregate yield of the system. But also one thing we want to change is the idea of bringing in this concept of active yield. And right now, the only participant in THORChain that receives active yield are node operators. They literally get given the fees directly to the node operator address every single churn, every 3 days. So they take that yield, that rune, they sell it if they need to run their bare metal servers and whatnot. But it's like constant cash flow. Bond providers, in a way, do lock in their yield because every single churn they get literally an on-chain transaction to top up that bond, and then that bond goes back into the bond module. But we kind of want to take this step a bit further because it really improves the user experience where all participants in THORChain can contribute a form of capital. That capital is in the system earning yield, and that yield is realized back to you on some cycle. And then you can see it, you can taste it, you can feel it, you can touch it, right? And right now, if you go into the system and your yield gets commingled with your principal, and there's no way to separate the two, you are forced to consider your original deposit, and then you compare it with your current value, which is your commingled yield and principal. And then we force you to just compare the two and say, hey, your principal plus commingled yield has gone up by like 2%. So you're on like this kind of amortized 2% annual APY, APR. But if we instead gave you active yield, you would take it a step further and you would go, hey, I'm getting this cash or this kind of constant yield sent out to me. So now you compare your yield against your current principal. And so the user experience is much better. You're constantly getting cash, or this cash-like distribution. And so you compare your cash-like distribution with your current principal. You can compare your cash-like principal plus your current principal value, and then compare that with your original deposit value from like 2 years ago. You can still do that if you want, and that's like the LP versus HODL thing. But you're more likely to just compare your current cash-like distribution with your current principal value, and it will just be a better user experience. So it's not as though it's been hidden. It's just we're just giving you, by separating yield from principal, we can give you a better user experience. So, like as an example, if you go buy a business like a barber shop or a restaurant, and you spend 200 grand to buy the business, and the on-market value of that restaurant is going to change. Like you could probably sample it every second if you want, but most likely you would get it valued at like every year, so you know what the value of your restaurant is. And that the market might go through a recession, it might go through a boom. There might be like people coming into your local area and valuing restaurants more. So your restaurant value, the actual price of the, if you were to sell it, goes up and down in value. It's like this in impairment loss characters. But if you constantly receive cash-like distributions, you can pay your tax, you can pay your employees, you can pay yourself. And so you say, hey, my restaurant's earning me 40 grand a year in like cash, or 100 grand a year in cash. And then you go, that's a much better user experience than commingling your cash back into the restaurant itself. And so you walk up to the restaurant every Monday morning and go, well, do I sell a brick here to get my cash out? Do I sell a table? What do I sell here to get my yield out to pay my tax? Or to pay myself. So that's kind of like the user experience leap we're trying to make here with active yield. We're not pushing it now, but we're just trying to like create a bit of inception here to say, hey, we might be moving every participant in an opt-in way or an opt-out way towards this active yield. RunePool would be an interesting product to experiment with active yield in, by basically siphoning out your rune gain into like a trade account. We could even like push it into THOR. So a THOR is burnt rune, a dollar. So you might opt in to receive your RunePool yield in THOR, which is a stable coin. So you throw 100 grand into RunePool, and then you get this account which accumulates THOR, which is like locked in yield. And you go, hey, my RunePool position is like it's volatile. It goes up, goes down, but I'm here for several years, and I'm earning like this cash-like distribution to me. So this is an interesting thread we might start pulling soon when we get a bit more bandwidth.
Yeah, and JP, I would love to comment that anybody who's sophisticated enough, or anyone who's smart, is going to be looking at their rune pool position and pulling out positive P&L when the P&L is positive, right? I mean, isn't that what you would do? I would certainly just wait, and any time that I was in the green, I would just withdraw the difference and bank those funds, because rune pool is susceptible to impermanent loss. Your principal can be subject to impermanent loss, meaning you can go down in the amount that you deposited. So if I were a rune pooler, I would basically just be locking in any positive P&L anytime I can have an opportunity to. Like I would literally just write a script that runs it and builds those transactions and broadcasts them.
Yeah,
why not have we should have the
but
protocol give them the ability natively to do that, is what I'm saying.
yeah, exactly. So it's the idea that if we want 1 million people in RunePool, and like only 1% of those people would know how to write a script to do that.
Right.
But the experience of receiving an active distribution, a cash-like distribution, I think is the 0 to 1 UX change. Well, it's a very big improvement.
Yeah, exactly. So yeah, we should strive towards that. And it probably would mean that the protocol would be less, it would probably just attract less like dumb cap. Like it wouldn't have like capital just sitting around in it that, it would be more responsive, even though there would be less TVL, because people right now, it just assumes that people are just going to keep compounding their yield and their returns back into RunePool, and that's good for the network and good for the protocol, but it's not good for users. So I think, but I think making it better for users also makes the system more responsive and more efficient. It's responding to yeah.
Yeah. Now, there's no better example of this than if you look at the evolution of constant product pools and contract liquidity pools, and even compare THORChain with ChainFlip. So contract liquidity optimizes for active market participants who can provide just-in-time liquidity and can arbitrage instantly around the current price. As a result, UniV3 and soon UniV4 has pushed out a lot of retail LPs because you basically lose to sophisticated market players. Solana, the biggest pools are actually gone back, and all the meat pump.fun, where there's a lot of retail users and not much sophistication, they've all gone back to constant product pools. So it makes you think that contract liquidity selects for highly sophisticated agents, and like Chainflip is a good example of this. Like all the traders and arbitrage agents are like highly sophisticated because they need to be, and so you don't need much TVL to achieve the capital efficiency. But THORChain has always tried to optimize for how do we make it passive and how do we optimize for retail users, the community who aren't sophisticated, can't write scripts and can't like arbitrage between Binance, blah, 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 very effectively. What if we truly could create this protocol that offers passive services where you just set and forget? You throw your bond in. A year later, you've got bond times 1.10, 1.1. Or you throw your assets into the protocol and you earn like 3 to 5%. So like that's where we can get 100 million people participating in THORChain, and be different.
Yeah, definitely. Cool. So what else do we talk about? Do we need to do a quick recap on BTC Comp, or should we just skip that? There's so much exciting things happening right now. I feel like.
Yeah, I mean, we could do a quick thing on BTC. Like we had the Thor Cybertruck out there, and that thing is absolute head turner. I've never seen that many people take pictures of me or any kind of car ever. Like that, it was just absolutely insane driving around on that thing. Shout out to JP for making that happen. And I think it's going to be around at a bunch of different events later this year. Other than that, just meeting some of the community. You guys know who you are if you were there. If you're at future events, definitely reach out to us and come meet up. And then a bunch of different integrators and stuff. Very, very good conference for all of us.
Yeah, absolutely. And that truck will be going around the different US-based events this year. So it'll be at Rare Evo. And as the events come online, I expect that the Thor truck will be there. And it's just basically a Cybertruck. If you're a THORChain and you go to one of these events, track down the truck and get a lap around it. It'll Uber you between your hotel to the conference venue. That's fine. It literally is just for the community to play around with. And it's not an obnoxious vehicle because it's got the Bitcoin wizard down the side. Like people just find it so funny to look at, and the phones come out. So it's a good vehicle.
I saw we made it into some like Brazilian Bitcoin publication, tweeted a picture of it. And it's like, we can sit here on Spaces all day long and talk about all the shit that we're building. And at the end of the day, a picture is worth 1,000 words. And getting that circulated all over the internet right now is just like, I don't know, it just creates so much hype. It's fun. I love hype.
Yeah, so we broke Reddit with that Cybertruck. We absolutely broke it. All the Cybertruck hater subreddit and the crypto hater subreddit all came together. They want to make it their banner image. It's great.
that truck was the most hated thing on Reddit. I loved it. Like Reddit is just so funny because it brings the haters out. But the Cybertruck community hated it. The Bitcoin community hated it. I loved it. It was so good. It was just so much kind of emotion flooding through that Reddit at the time. It was good. Yeah. While we're here, we should also talk about the next 6 months and what we're working on. So RUNEPool's out.
I was almost going to say we should do a recap of like the last 6 months. We haven't done a Spaces in like months now, but I mean, yeah, let's talk about the upcoming roadmap first, and then when you have to hop, we'll talk about everything.
So RUNEPool's out. Next one is the hard fork that's going to bring IBC, Taproot. Actually, Pluto. It's an intermediary hard fork, isn't it?
Yeah. We're still trying to figure out if we can do it in a way that allows us to add future Cosmos features like IBC and their native upgrade and all the stuff we want to do around the module stuff. We're still trying to figure out if we can get to that version now with this hard fork without requiring too much lift. But if we can, that's obviously preferable because that means we don't have to, do more hard forks in the future. Like they just set us back in terms of all the other fun stuff that we want to be shipping. And so it's just like, why not get all the way there now if you can?
A hard fork does a couple of things. One, it flattens the state, so it makes it easier for Thor nodes to sync. But you guys run snapshots, so it's not that much bigger deal. But the second thing it does is it flattens all the radioactive code in the code base. So it's like a good flush of the system, and the system accrues so much kind of like debt over the years. So I think a hard fork is kind of necessary every few years just to like flush all that stuff out, because of the way it's designed. But and also bring in new features. So the hard fork, and then it will be Solana, and we're debating at the moment how we're going to do a Solana launch. Do we get the treasury to pull a bunch of money in, or do we get the community to do it through a liquidity auction? So that's ongoing. No decisions yet. Lots of experimentation there. Solana L2s, a big put. The difference with L2s is we're going to do it through like this kind of like roving RPCs, so just make it
Whoa. You
faster.
said Solana L2s. I just want to back you up. Solana and L2s are two separate things.
Yeah, Solana and L2s.
And
L2s like Base, Arbitrum, Polygon.
right.
What are you guys cooking? Which L2s?
We're cooking base right now first. So we're trying to decide whether we'll ship base like right after the hard fork, because that seems like a pretty easy lift. But I'm actually like making very significant progress on Solana. Like it's possible we're going to broadcast the first mainnet Solana transaction from THORChain mocknet like during this call. I'm hoping I can do that. But we're super close on Solana. So I think that Solana could be the very next thing after hard fork, and we could see Solana in August, or sorry, in September. But that said, like it would also just be a good win to just ship something quick that we know we can do relatively easy, like base. I really like Polygon. I've been following all of the Poly market betting, all the betting going on Poly market. Like it's an awesome use case for crypto in general. It just makes information freer, faster. Like the idea that there's people who are betting on these betting markets who absolutely have some kind of information, like they're privy to something. And so the idea that like information is going to start bubbling up through financial markets faster than it hits the actual news cycle is just kind of a wild proposition. And crypto really like accelerates information, and it accelerates the dissemination of information. So I've just that's just like a random rant on why I like Polygon, but Poly Market. But yeah, I think Polygon base would be my top two, and then maybe like Arbitrum, and then maybe Optimism after that. But yeah, I think the strategy for L2s is that we're going to ship them a lot faster than we have other integrations in the past, by just relying on a randomly seeded list of approved RPCs. So instead of having to have every single validator run each RPC religiously, like that, which has been our sort of position for the last 3 years, it's been good in that it's like a very it's a very decentralization maximalist viewpoint or standpoint to take when it comes to like adding new chains. But um but yeah, I mean, like I just think it doesn't allow us to be fast enough. And so like if we want to be fast, we have to start to relax those standards a little bit. My goal would be to like experiment quickly by adding new chains, and if they do prove to have a lot of volume and a lot of TVL, then you push to like decentralize the validator set to make them all run their own infrastructure, or you just kick them off the network and Ragnarok them. Like I think we can move a little bit quicker if we have a bit more of like a flexible way of rolling out chains. So yeah, that's the L2 strategy. And then Solana and EDDSA, like that one, and TON, of course, because TON and Solana use the same curve signing signature. So adding the ability to do EDDSA with our current vault structure has been quite a challenge, because everything on THORChain so far uses ECDSA curves, which is like Bitcoin, Ethereum, Doge, Binance Smart Chain, AVAX, like almost every EVM chain, like they're all using that as well. So like basically getting EDDSA support, which is what I'm working on right now, and it's a prerequisite to adding Solana. But we're just going to ship EDDSA and Solana together. So I'm super excited about that. That's going to open up so many new integrations. I think right now after RunePool, like I know there's still a lot of other things that we want to work on, like maybe concentrated liquidity, order books. But I would love to just put a little bit of a pause on feature work now that we have RunePool. I would say we should definitely get auto bond out, because auto bond is like the other side of RunePool, and will help tip the incentive pendulum back towards LPs. But I think if we're able to ship Autobond, the Savers POL match, which is what you were describing earlier, which is why we need to it just helps RunePool and to scale Savers. If we can get those two things, I think we should then just go on a full court press on adding new chains, starting with Solana, Ton, Base, and Polygon in that order.
Yeah, absolutely. And that's what the chains need. Each time we add a chain, the volume might not be much, but the network effect is what cements THORChain as the liquidity hub. And if by adding SwapKit, we can capture all those flows and bring in these communities together, and that's how we win the next cycle. Not only this cycle, but the next cycle, by being that multi-chain Pareto dex that has aspect to all these communities. So super exciting next 6 months. It's all happening at the same time, but we can't drop the ball in security, so we're engaging with 2 more firms to recheck. There's a firm in Israel that we're trying to engage with to basically be the if they run a forked Thor node and do a state transition check on every single transaction in the mempool, and they already know ahead of time if that transaction is going to cause issues. We can work out within a second if a transaction is going to cause an issue on THORChain, and hit a make pause on a node. That's where I kind of want to push this firm to run a Thor node state transition check on every single transaction. And there's another firm we're engaging. They're called Hexagate. They actually found a giant hack transaction recently on Uniswap within like 6 seconds by the infrastructure. Another firm we engage with is called Zelek, who are currently the go-to firm to do all the bridge auditing. So we're basically just auditing and reordering all our bridges again, because we can't afford to lose another single dollar on the network, because we basically have to be the network that's never down. Yeah. THORChain is already massively redundant. Like, if you think about it, it only needs 2/3 of its nodes online to manage it. Whereas if you think of like Coinbase and Binance, Kraken, like they need all the infrastructure more or less online all the time to handle it. Whereas THORChain is actually naturally redundant and globally distributed, so it's a lot more resilient. So massive good base, because we not only do we want to win this cycle, but we want to win the next cycle, the 2029 cycle, because that's the $100 billion play that we can make if we do really well. So like Pluto said at the start of the school, we still feel like THORChain is like halfway through where it is to get to that level. There's still a lot of features, but I think over the next 12 months we will solidify these features. We'll lock down our feature set. We know what we need to do, so we set ourselves up massively to win the next cycle in a huge way. Notice that I keep saying next cycle, because I really want people to understand that this is not one in a year or a month. This is like a 10-year protocol that we're building. So I want everyone to think about, what are we doing now to win next cycle, and not get worried about the price of today, because there's so much asymmetry there anyway, and not be myopic or not be flighty. Like, just think, how can we win the next cycle by doing the things we need to do today? And then that sets you up your mental framework to be correct. I have to jump now. I'm going to catch up with someone in the Paradigm offices here at 520 Broadway. I'll just drop that after there. Cool, guys. I'll talk to you guys soon. Thanks for everything. Bye.
Thanks, JP.
Cool. Should we take some questions from the audience?
Yeah, if people want to come up, just request. Otherwise, we'll just keep talking about whatever you want. You want to go through some stuff that we went through in the past, like the past couple months? Yes, we haven't done one of these spaces in a while, so we can kind of go through everything that we did in Q2, I guess. Right now, just looking through some of the stats here, and I'll add up some requests while we're doing that. Bunch of new integrations, which is a lot of my focus. Let's see, we shipped Fireblock. That's an MPC Rune wallet to make Rune more institutional. They're one of the biggest institutional wallet providers out there. Absolute Chad. So you can custody Rune on Fireblocks right now, and it'll be a great platform to bond to a node, enter RunePool, like anything like that. Anything where you need to custody large amounts of Rune, Fireblocks is definitely going to be the place to go for that.
For sure, for sure.
Yeah, we shipped Li-Fi. That just got announced very, very recently. I think they just made an official announcement. They're going to be shipping Bitcoin soon through THORChain. Li-Fi is one of the biggest DEX aggregators out there. They power tons of clients like MetaMask, Robinhood. You know,
Yeah, I've also heard that MetaMask is working on adding native BTC support as well, finally. So, assuming they're already plugged into Li-Fi, that should just give them direct access to Bitcoin and Ethereum swaps, which would be really sweet. But yeah, there's also, man, all the ones that I'm most excited about have just been taking so long. It's such a long process. Like our biggest integrations take like a year to unfold, and it's just like you have to build trust. You have to there's just like you have to gain a competent technical understanding with their product team, their engineering team. Like it's just such a monumental effort that takes so much time. But there's some really interesting ones coming down the pipe that will be quite big. Hopefully,
yeah.
like actually one big one in the next like month or two. Domino's.
Yeah, one that people have been looking forward to for a while. And like as the really big interfaces start moving, that just provides a social signal for the other interfaces to, have that trust and understanding that, we're building the base layer of liquidity here. So we already have Coinbase. Sorry, not Coinbase. I mean, we already have Trust Wallet, right? So Trust Wallet's using THORChain for swaps. I think everyone here probably knows that already. And as more and more interfaces start coming to the table and adding it as base infrastructure for their swap product, which we've already received so much feedback from wallets who are using things like Changelly right now, saying that Changelly service is all centralized. Their users don't want that. It provides worse rates. They get also screwed on the spread and the taker fees and things like that. So as more and more of these really major wallets start adding, it just provides the signals for the other ones to also say like, all right, this is all right for us to add. So, but the foot's already in the door, and then we have some really major ones shipping real soon.
For sure. Yeah, let's bring some people up right now. I will just caveat this by saying if people want to come up and talk about the price, just don't. Like, we're just going to remove you from the stage. I know that it's down today. We know that it's down today. It was up last week. It's down this week. We can't do anything about that. So if you want to come up and talk about the price, just don't. We'll just remove you from the stage. But if you want to come up and ask about like roadmap or anything that we can answer, we'd be happy to talk about it. So you want to start bringing some people up right now?
Yeah, especially questions on RunePool. Yeah, we can start with Crypto Sailor. What's up?
Hey, thanks for having me on. Congratulations on space number 100. It's been a while, so good job to everybody. And
we've actually had way more than 100. There's probably a number of them that have been lost to the sands of time, but this is officially number 100.
No! You can't tell everybody that. Look, this is this is the number 100, guys. Yeah. So good job on that. And also, I mean, I was hoping JP would be on, but I really think there's a lot of really awesome things going on. But I also think, of course, there's some challenges too. And I really respected. I guess Pluto kind of mentioned it when he was talking, which is like, there's two different ways by which you can attract usages or new users, which is building new features for existing markets or opening up new markets for your existing features. One of those requires more dev work. And a lot of times what happens in this space is, everybody's talking about, can devs do something? And it all comes and weighs down on the shoulders of developers to build new features to get more users. And I did appreciate, what JP was doing with, the conference and the Cybertruck and all that kind of stuff. And my only point was going to be, if we're thinking about the bigger picture and what's happening with this ecosystem and the trends of this tech revolution, obviously thinking big, as JP is saying, is what's going on. But I would have asked him, to what degree is all this money that they're spending on all these other tokens like Vault and Chaos, or I don't know what else is going on. It's just, how does that actually, when and how does that actually tie back into Rune? Obviously, he's gone now. I can't ask that. The other question I would then try to see was, when it comes to integrations and things like this, when in your opinions, has any integration really directly impacted TVL? Because I think what you're primarily focusing on, and this is another great thing that I'm happy to see, which is JP talking about increasing the attractiveness of LP, because obviously the great thing about THORChain for swaps is that nobody has to know about it, but the conversely, if you want people to LP, they have to know about it, because they're giving up custody of their crypto to the THORChain protocol. And I think it's a kind of a bigger trend and a tendency of those of us who are engineers to over complexify things. But the more complexity you add to the protocol in terms of risk profile, the more difficult it is for people to grasp the total risk profile when they're putting up their crypto for LP. So
Yeah,
I would, that's where I'm coming from. What's your thoughts?
I totally hear you there. Yeah, it needs to be as easy as possible from a user's perspective to be able to participate in the network. But the lion's share, like 99.999% of participants in the THORChain network, are swappers. And swappers don't see how much TVL is in the network. They don't see how much APY the pools are earning. They don't see any of that because they don't care. And it's not their responsibility to have to care. They just literally want to swap one token for another, and there's going to be 100, or a dozen other platforms that allow you to swap cross-chain that are conversely, they are not going to surface any of that information to the end swapper. All they care about is the price that their swapper is going to get on the other side of it. And so while more TVL helps you get more better pricing, we haven't seen that the increase in swap volume over the last year, the maybe like 10x increase in swap volume that we've seen over the last year, has not related to a 10x increase in TVL. So it's not like $1 of volume brings in one additional dollar of capital. That just simply is not the case. Like, you don't need as much TVL as you think you need to be able to do swaps competitively in this current market. If you wanted to if the entire market grew and there was 10 times more actors swapping at any given time, or there was, we 10x'd again, yes, the TVL and the liquidity would have to change. But our implementation of streaming swaps is so capital efficient on the dollars that are custodied in THORChain today that really, and this is maybe where JP and I would disagree, but I don't think TVL is the number one priority. I think increasing swap volume is the number one priority, because that is going to create outsized rewards for the LPers, and then anybody smart is going to want to get in on that. How they find out about it, it's not my problem. Like, that's not my problem. That's the end user's problem, who are designing the LP UIs. I don't think that a UI, being an LP is or a liquidity provider in THORChain, is something that most people should do, because most people don't have the ability to understand it. You should not buy complex financial instruments that you do not understand. That's just like basic finance 101. So if you want to participate in the THORChain network, you can, the auto bond feature is going to allow you to bond it to a node, or you can participate in RUNEPool. But for savers is obviously a great way to do it, with basically with synthetic assets, but even those carry their own risks. So at the end of the day, as a protocol, really all I care about the most is that we're building a secure system that is connected to as many chains as possible and is able to facilitate as much swap volume as possible. Those are the only three things that are needed in order for this chain to be successful, because everything else will come downstream of that. The LPs will show up because the APIs will be so high. But right now, you have LPs that are complaining that, the APYs are too low. It's like, well, that's just an indication that the THORChain is as capital efficient. It has attracted as much capital as it needs to efficiently service the needs for the swap volume that it has.
And also, the rates in the protocol, I've noticed, it's a lot of people have said the protocol is really, 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 really cheap. And due to the fact that there was no competition and there's very limited competition now for THORChain. Price sensitivity is probably not the the greatest impact on usage. So I think that was a really great shift in strategy that I think JP was buying into. And like you said, that sure, when it comes to that APYs, like swap volume helps, but also streaming swaps are capital efficient, but it also takes time. So if you're looking at like who are the biggest custodians of crypto, it's centralized exchanges like Coinbase and Binance, and they don't have a direct way by which they can swap $1 billion of ETH to BTC unless it's OTC. So I think if you're talking about what swaps volume, which would help the THORChain protocol the most, it's swaps between centralized exchanges who have no alternative to use centralized exchanges. They are the centralized exchanges.
They already have their own OTC desk set up, dude. I don't want to hear about what's it going to take to make $1 billion swap on THORChain. Like that's not THORChain's purpose. THORChain's purpose is to facilitate exchange of value through liquidity pools. Like the idea that we should be chasing this, like so that like exchanges can settle like $1 billion trades through THORChain, that's just crazy to me. That's not. There's so much more low-hanging fruit in terms of consumer volume. We need to get into Coinbase wallet, Binance Web3 wallet. We need to get into Ledger. We need to get into Phantom. We need to get into every single consumer side wallet and win that side first, and then we can start thinking about this so-called institutional strategy or whatever. Like it's not. Everyone knows that that's just a unicorn in crypto that if you pay attention
but
to that,
the thing is, like when it comes, like think about what you're competing against, right? So when you're talking about we want in Coinbase and stuff like this, you're talking about retail swappers. Retail swappers probably aren't swapping a lot of value, and
they are. Everything's moving on chain. It's an easier experience than a SEX. You won't even need to ever sign up for a SEX. In 2024, all you need to do is download a wallet and start swapping through your wallet. Why would you ever sign up for and give all your documents to an exchange? Like people are still using exchanges because that's what we started off using in crypto. We're building for the next wave of consumers. We're building for the next 10 years of people who are never going to use a SEX in their life. There's going to be a whole generation of crypto people that onboard into this ecosystem that never even touch a SEX because of THORChain, because of wallets like Trust. Trust me,
but there's also
want to talk about strategy. I don't want to talk about how we're going to do $1 billion swaps. Like it's just so far in the future. Let's just talk about that when we get there. But for right now, how are we going to continue allowing people to do $1 million swaps every single day? Open more routes? Like that is, I think, the more important thing to talk about. I'm not undermining what you're saying in terms of that's a good goal, but like it's just something that's very difficult. People always want to talk about the next. It's like we have very, very clear mandate right now, and we have very clear like laser focus on what we need to do, and that's what we're executing on.
Yeah, I hear you on that, and good job for you. But my only point is here's my overall point to everything. Okay, the growth and success of the protocol should not be on the back of the devs.
Yes, well, I obviously agree with that. I mean, but at the same time, like it's our responsibility, or it's my responsibility to make sure that the devs stay pointed in the right direction. That we don't get the millions of voices of people. Like there's just so many people with opinions. People's opinions are stronger when the price is lower. Like it's been so difficult. Like we have to literally do all of our work out in the open. We're constantly getting criticized in Discord, but it's good because it's good to know about that, of all of the opinions that exist, and to prioritize them accordingly. But like right now we're in like heads down ship mode. We know what we have to do. We're going to ship Solana. We're going to ship all these chain integrations, and then I think like that in the past we increased TVL by 30% when we added Terra. Right? That was like that increases TVL, adding new chains, adding volume. Like I really don't think that there's any combination of like features that you need to build to like solve the TVL problem. It's literally just give users the opportunity to get where they want to go at a good price, and you'll win.
That's exactly what I'm saying. And I think that too much in this space, it's like devs more features, devs more integrations. No. How about more concerted communications, business relations, public relations, and marketing after the primary target market that should be engaging with this, which is larger custodians of crypto. That's my point.
Yeah, I appreciate your point as always, Crypto Sailor. Thanks for coming up.
Yeah, thanks. I also want to point out like two things that we're doing for LPs right now that we've already implemented or in the process of implementing. So there's two things that we have done recently, and the first one is the minimum slip on L1 trades. So in the past, like an L1 swap can basically go infinitely low as far as fees, but
Bro, people were
we
getting 3
yeah
bips on trades.
yeah exactly
It's insane. Like
yeah.
THORChain has been too competitive. But
Yeah,
yeah,
exactly.
continue.
So we set a minimum floor to 5 basis points. So basically, any L1 to L1 swap goes to 5 basis points now, which we've already seen a big fee increase just because of that. So that's part one of that. Part two, which kind of ties into your question about the drive of affiliates into liquidity fees. And there's a ADR that was just passed, not implemented yet, so dead self to implement this. But essentially, what this would do would since THORChain has found quote unquote price insensitive users, which are not arbitrage bots, which is like a lot of volume on the network is arbitrage, right? So we found price insensitive users, which are users that use interfaces like THORSwap, Trust Wallet, Shapeshift, et cetera, et cetera. And what this essentially does is matches a percentage of the fee that goes towards the interface. It adds that as an additional liquidity fee. So what that should do is just create an additional source of revenue for liquidity providers and nodes to bring in extra fees from price insensitive users. So that's also another lever that we've been taking just to bring up fees that goes towards all the different participants on the network. So there's definitely no lack of attention by anybody here to make fees as much as possible, because really that's one of the biggest KPIs of the network, and one of the most important things that we're all focusing on is just driving fees, because that's really what gets everyone paid. That's why people LP, that's why people run nodes, to earn fees. So like that's definitely something that we're all laser focused on. And yeah, to Pluto's point, yeah, the next 6 months are super clear where we need to go and what we need to ship. So like it's going to be grind time for the next 6 months of just getting everything that we need to out the door, and also shipping out the next wave of big integrations and working on stuff like that in the back end. So yeah, we can move on to Prime Directive. And if anyone else wants to come up, hit the request button.
Yeah, I was just gonna say it's never been more clear to me how we're gonna win this. Like it's obvious, and it's just like heads down shipping mode. I mean, we've been shipping through the last bear market and everything, but like I think there's definitely like renewed interest in THORChain now, and we've been getting so much inbound that's been very encouraging. And and from those potential integrators that we've talked to, we've just continued to hone our roadmap, and so it's just it's just very clear what we need to do.
What's up, Prime Directive?
Hey, you hear me okay?
Yep.
What is up, THORChain champions? I could go on and on. Crypto Sailor at comment, like right when he started talking, he was saying like he wasn't sure about what all this chaos was for, and I don't either. But just one comment I have on that is that I think that that question of like how do we get that TVL to flow in or whatever, I think that that's what the chaos is for. We're just gonna shake up the
100%.
apple carts with all this new crazy stuff. Everything falls down and then rolls into the black hole that's already been built, and THORChain's the black hole. So that's my recklessly idealistic idea of what all this chaos is for.
For sure, man.
So
I forgot to answer that part of Sailor's question when he asked it, but yes, that not to speak for JP, but what I think his philosophy is that like the market needs these products in order for crypto to go where it needs to go. And just to remind people, like 3 years ago, there wasn't even a library for people building cross-chain wallets. Like cross-chain wallets didn't really exist. Trust was one of the first wallets that actually allowed you to like, if you look back, like my Ether wallet, like arguably one of the first wallets ever, ETH only, right? MetaMask, ETH and then EVM only. Trust came along and actually did multi-chain wallets. There wasn't even a library for dApps to build a cross-chain experience. So JP funded the team, XChain.js, to go and build it. He funded AsgardX from the THORChain treasury to build the example reference implementation. And that is today, even today, one of the huge drivers of volume. So it's like so many dominoes needed to fall before we could even imagine that this cross-chain vision could even exist. And so that's just what he's been doing from day one, and that's what he's going to continue to do. Anyone who looks at something like Vault or Chaos and sees that as like bearish because he's not focusing on THORChain enough, or he's stealing users away, is completely missing the point of all of his efforts and everything that he's done over the last 3 to 5 years. It's like he is just going to go once he's like, okay, I'm happy with where THORChain is at. I'm happy with the direction that the team has. He's going to go work on other projects that are just going to funnel more volume and more users to THORChain. Why Vault? Well, he thinks that the wallet experience is broken. He doesn't think that the most secure version of the wallet experience on the mobile phone or on the on desktop exists. So he's going to go out and build it, because at the end of the day, that's going to create more adoption. People using Vault are going to be they're going to go to the swap tab in their app, and they're just going to be getting surface THORChain swaps, right? So Vault is going to directly contribute to adoption of THORChain. Chaos wraps up all of the aggregators. Aggregators are just a race to the bottom. There's been, there's a ton of different teams working on them. But at the end of the day, the team that's going to win is going to be the one that has the simplest interface for users and for developers to integrate it, and has the most routes and coverage and takes the least fees. If you can nail all three of those, then there will be one or two winners in the aggregator category, I think, or every wallet is just going to build their own. But if it's convenient enough for them to avoid having to spend money on development cycles to implement their own aggregation, they'll just use an aggregator like Chaos. Again, at the heart of Chaos, all of the liquidity being served for BTC and ETH swaps is going to come from THORChain. So it's like these things, I see them as immensely positive. It's not like he's taking resources away. He's not taking anything away from THORChain to build them. If anything, it's just going to improve THORChain.
Yes. Thank you. And that's kind of why, it was uncomfortable for me. I'll just be honest. It was uncomfortable for me. I've been here since literally day one. And, this guy jumps out of the closet and I'm like, whoa, holy shit. Like, I thought I was on some other trip, and it took a while to digest everything. But if you zoom out enough, I am convinced at this point that I need to trust the process. This chaos is on purpose, and I'm in. I've been so all in on this. I've never been more hopeful. So seriously, congratulations! Not just to everybody who built it with RUNEPool, but I am like a kid in a candy store. I'm so I waited for years. It's like, to me, the Rune Vault has been resurrected. And that's one of my first lessons. And I'm not here to talk about price, but that I won't even say any numbers or anything, but one of my first lessons in trusting the process was how, I'm getting these RUNEPool distributions, and like every week I got to collect my whatever percent it was, and it wasn't really that big of a deal then. And then you fast forward years later and I'm like, oh my God, that was really significant. And I feel the same way today about, RUNEPool. Like, how awesome is that I can earn Rune on my Rune? I've been sitting on it, and now I get to put it to work. I had a lot of my liquidity I pulled when they shut down the Binance chain or whatever. Like, that's where most of my liquidity was. So I just sat on it, and I'm like, woohoo, I got something to do with it now. I'm super stoked about that. So the reason I'm congratulating everyone is because there are a lot of people that have been here for a long time that been die hard, just holding on their bags or whatever, even if that's all it was. Now they got something to do with it. Now we get to earn Rune on our Rune. So that's awesome. And so zoom out. I'm zooming out, and trusting the process is all part of the plan. and just I'm buckled in and holding on as tight as I can. I don't know what's going on with all these new things. I'm trying to follow it the best I can, and that's all I can do. If I could make a recommendation to the community, is do not do it alone. Gang up with some of your other THORChad friends. Just figure this stuff out together, because there's a lot going on, and I want to ride this wave, and I'm doing it with my friends, and it makes it a lot more fun. I do have a couple quick smooth brain questions, because they may have been answered earlier when JP was talking all of his rocket science, but that's not the part of my brain that is, I'm not that good on that side of my brain. So if I could just ask a couple quick RUNEPool questions, and I had one more comment. Do we have time for me to do that?
Yeah, sure.
Awesome. So
I appreciate your support, man. By the way, thank you.
Yeah, no, this is like, I don't know. It's like become a big part of who I bought sneakers. I bought sneakers a year ago. I'm shopping in the sneaker store, and trainers for people that are on the other side of the pond. And I chose them because like the colors, like I have my the case around my iPad is like anything, every like that Tootsie Roll commercial, whatever it is I think I see becomes some THORChain thing to me. Like my life like revolves around this over the years. I have a life too outside of THORChain, but it's a big part of my life. So yeah, thank you too for building all this stuff. So here are my smooth brain questions. Does the 90-day clock reset if I want to make another deposit into the RUNEPool?
That's a good question. I'm pretty sure it
Yeah,
does.
it's based on your last deposit, and also it's likely that we're going to move it down to 30 days. It seems like there's consensus around that, but it just hasn't been done yet. So once that's done, everyone can just withdraw 30 days after the last deposit. But yeah, any deposit kind of resets the clock. It checks when you last deposited into RUNEPool, not your first deposit. So if you deposit any more, it kind of locks up the entire thing for whatever the period is. So if we pare it down, then it goes back to 30 days. If not, it stays at 90.
Cool. Thank you. And I noticed that, so that's another awesome thing I noticed today, that RUNEPool is already on the network monitor, and you can like play around in there and look at all these crazy numbers, that's how I came up with my question, because I found my position, and it was like all in one little line. So, I threw a couple shovelfuls in already, and, I was only at 0.66 of 1 day. So that answered that question. And thank you. So the next one I had was, don't let me just fade how cool that is, that you can go on the network monitor and look at your positions and see how that's all
Sorry,
work.
I just want to issue a correction. I'm looking at the code right now. It does reset on every deposit. So every time you deposit, it restarts the clock.
Cool. Okay.
Yeah. But what FamiliarCow said is that will be getting moved down. It was more of
Cool.
just like the 90-day thing is actually not because of any kind of like we think that users should like only use this product if they think that they're going to be in for like the long term or whatever. Like THORChain should not be prescriptive and like ascribing those requirements to its users. Like it should be as if yeah, it has to work, no matter what, in both directions, right? So like that has nothing to do with like our view of as devs of like how long is the right amount of time. It was more a question of like is it possible to like game the POL by quick doing quick deposits and withdrawals to basically have like the reserve incur in permanent loss as opposed to the users. But I was advocating for making it like 3 days. I think we'll probably see us like walk it down immediately to like 30 days, and then at some point maybe it'll go to like 3 weeks, which is the industry standard for how long it takes to like unbond from a delegated node, for example. So it'll put it on par with that. But there needs to be some protection around like people, gaming it, and like how much time that is. I think we'll just keep pushing that down further as we get more confident.
Beautiful. All right, a couple more quick, simple ones, if I can. So the rewards, I don't know if it was a glitchy thing, because I was looking at it on day one in THORSwap. So I don't know if it's just that, because it's new, but do the rewards fluctuate? Because I saw that my reward balance kind of went up and down a few times while I was sitting there yesterday. That's part one of that question. Simple one.
Yeah, 100. I
Should
mean,
they?
100%. You're in a dual LP position, so like you shouldn't think of your rewards and your principal as separate because they're all kind of commingled unless we get this active yield thing that JP is advocating for. But that's not the reality today. Right now, everything is commingled where your deposit goes up and down based on all the different pool price movements. So you experience impermanent loss, or the Rune pool starts buying Rune because Rune goes down, your balance of Rune goes up. So
Okay.
it really just depends on all the price movements of everything. So your balance changes by the block. So you check every single block, your actual share is going to be a little bit different. So if anyone's like looking into RunePool and like whether to make a decision on that, my advice is just look at how RunePool reacts to different price movements, and then make your decision on when to deposit and when to withdraw based on that. Like definitely do your own research, and don't enter something which you don't fully understand, because a lot of people have been burned by entering dual liquidity provider positions before without really understanding what they're doing. Now, we think that this is a safer way to do dual LP because you're in a lot of different pools at once, so it's a little bit more diversified, but it's still a dual liquidity provider position. So anyone needs to be aware that you could definitely lose Rune doing this. It's 100% a possibility, so you should monitor and really deeply understand what causes that and how that works.
Awesome. I think you may have answered the second part of that question, which was I think what you said also means that the rewards are, I don't know the best word, like if I'm earning on my rewards, like if it's compounding in, so I'm earning on the whole thing, then they're not separate.
Yeah, it just auto adds to your balance, and then
okay.
It's just
like
part
the
of
LP.
it.
Awesome.
Yeah. I would say anyone who doesn't want to like experience impermanent loss, like it's a leverage position, so you're basically going to experience like more pain on the way down and more gains on the way up. So it's just like it's inverse of that. But basically, like if you don't want to be subject to impermanent loss, just wait for the auto bond feature. That's going to be coming in about a month, and that will be truly Rune on Rune, principal plus yield up only. Like if you like the APR for that is going to be probably very, very low because there's going to be a lot of people who want to bond in that way, and that's going to push the incentive pendulum to LPs. So there will be some sort of like there will be some sort of pendulum, or sorry, some sort of like balancing point where there's exactly as much LP and liquidity in the system and exactly as much bond and Rune bonded through auto bond and through validators as there needs to be for THORChain to be like servicing the swaps that it's servicing today. There's not an infinite upward amount of just like, obviously there's not an infinite amount of yields to be gained by everyone. Like there's no such thing as a pool with a fixed yield. Anyone who's telling you in crypto that you can earn X percent on your whatever and it just goes and it's only going to go up only is lying to you. Like that's just not how finance or capital markets work. So like if you just don't like understand how dual LP works, or you don't understand how our implementation of protocol and liquidity works, and how you're going to be you're going to be experiencing IL of like multiple pools, literally don't use the product. I'm telling you right now, don't use the product. Like just swap. If that's your level of understanding. If you want just simple Rune on Rune yield, wait for the auto bond product and use that. But it's going to be a very low APR, probably like 0.1 or to 1%. Any other project that's saying, oh, you can get 5% by staking here. It's like there's something. It's an LST. That just means it's like a derivative that's backed by something else that could potentially fail at some point. It just hasn't yet. Like there's no such thing as a free lunch. So that's my spiel.
Yeah,
about the
your
product.
position can go up or down. Like right now, some of the APRs, if you calculate like when someone entered, how much they're up now, and then extrapolate that out to a year, some of these APRs are like 43,000%. Now, I think anyone with a brain can like understand that that's you can't really calculate an APR for these positions because they're variable. It's not like you deposit into a bank and you know that you're getting X% interest with your fixed principal. Your principal will vary up and down just depending on the market, right? So like I think there's definitely some room for experimentation here, like figuring out how to communicate this best to users and in the UIs and stuff. Maybe some of the UIs will display APRs. Maybe some will just show what the current P&L of RunePool is. And yeah, I mean, I think there's going to be some surface area to like kind of figure out what the best way to communicate it is. But yeah, definitely, make sure you understand what it is you're putting into. And if you want to learn more about this stuff, THORChain University has some great articles and staff that answers questions about all kinds of liquidity provision products, and so you could learn more about like exactly how this stuff works. Or I think the best way to do it is just play around with it without with not risking anything that's meaningful to you, right? And just kind of experimenting and learning for yourself. That's how I kind of figured out a lot of this stuff myself, is just doing it yourself, right?
Yeah. I thank you so much for answering all these questions. I have more, but I'm going to set them aside. And I guess I'll plug FamiliarCow put out a tweet, I think yesterday, asking if anybody had questions about RunePool, and said he would answer all of them. So I don't know if maybe you want to post that tweet on this Spaces or something, so people can keep asking questions there too. Maybe I don't know if I just put you on blast there, but there's a spot you can ask questions there. And if I could, I had one more comment that was, and this is something, if you want to take offline, FamiliarCow, I have a little more, I kind of kept a history of it, but THORChain has always had a good, I'd say, like relationship or almost friendship with Ivan on Tech. And, I know that he's done a couple of really great interviews with us. And, I noticed a few times, I follow him and I watch him, and, the conversation changed a little bit around THORChain. His conversation. There was one day on one of his streams that like a couple of people were like, "Hey, what's going on with THORChain? It's getting delisted." And I think it was part of shutting down the ETH chain, THORChain. I could put it in better terms.
We've never been delisted from a major exchange. And
exactly.
We've never,
that's what I'm saying.
Yeah, so Bybit was delisting BEP2 Rune and then listing it again as native.
So my point is, though, that between that conversation and 3 or 4 other streams, it seemed to sort of like, I think basically my point is, I think he needs an update. If have anybody still in contact with him, because he has said so many times repeatedly over these streams, like, there is still no place for cross chain, all this stuff that THORChain does. And, so I think he's just I'm not
cool. We'll look into it.
Yeah, I'm not simping after him. He's just been a friend and a good voice, and that's it. So if you want to take it up offline, but might be great to have another conversation with him. Thank you so much for your time.
Thanks, man. All right, cool. Let's run through everybody else that's up on the stage here. Thanks, Prime Directive. Our Wizard, what's up?
Hey, so I had a question about RunePool. When you enter the queue, or I don't know if there is a queue or how it works, does there need to be an equal number of assets on the other side? Let's say I want to put some rune into the RunePool. Does there have to be a proportional number of assets that someone's waiting for to add to the other side?
Yeah, so basically what you're doing when you add to RunePool is you're buying protocol-owned liquidity. So this is liquidity that's already deployed. And so when you add to RunePool, you're essentially just saying, if you add 1,000 rune to RunePool, you're essentially saying, give me 1,000 rune worth of the POL position. So there needs to be a equal amount of POL deployed in order to do that. So right now there's 5 million in POL that's deployed. So up to 5 million rune worth of RunePool can be added right now. And then that capacity increases as POL deposits. So POL is protocol and liquidity, and it deposits under 2 circumstances. One being the synthetic asset utilization for a pool goes above 50%. So basically what that means is, like, if too much of the pool is savers, the POL starts to add in rune liquidity. So that adds the position. Second isn't live yet, but Pluto mentioned it before. That is the Rune match. So the new behavior, which is what's going to be happening in the future, not implemented yet, is whenever someone adds the savers, so they add 1 Bitcoin worth of savers, half that gets sold for Rune and is added into a synthetic asset, right? So that's what a synthetic asset is. It's made of, both Bitcoin and Rune. That Rune side will also be matched by the protocol to add as POL. So whenever someone adds a Bitcoin worth of savers, the POL will add, I think it's half a Bitcoin worth of dual liquidity into POL. So essentially that keeps the POL scaling up relative to the savers demand. So it's responsive to the actual demand of each of the pools. So I think we'll start seeing, some more exposure to Bitcoin. We'll start seeing more exposure to stable coins, also Ethereum, which isn't even in the POL list right now. So yeah, I hope that answered your question. Essentially, you're just buying POL, and there's some more mechanisms to keep POL increasing once all of POL has been chewed through by people who want to deposit into RunePool, which currently we're at I think 16% of the total POL deposit right now. So there's still plenty of room to enter, and you can still add Rune even if we're at the capacity. It's just not deployed yet. So I think it just sits there and doesn't earn any yield or anything. But then once there's capacity, it just kind of automatically gets matched. So even if we're at capacity, you can still add to it. It just might be on the sidelines for a bit.
Okay, yeah, I think it kind of answers it. So to use an example, let's say hypothetically there's 100 Rune in the Rune pool, and I'm 10% of that, so I have 10. And then for whatever reason, Rune goes down against everything else. Now there's 110. So my share is still 10% or 11, but I want to withdraw that. Do I get back 11 or do I get back something closer to 9.9 or something, which kind of takes into account the impermanent loss?
Oh, no. So whatever your position is, that's yours to withdraw. So you could withdraw that at any time. So there's no limit to, there's no consideration that you need to make for that. That's really only for if you're trying to deposit. If you're trying to withdraw or anything like that, you're basically just selling your POL back. You're selling it back to POL, then withdrawing it. So yeah, you'd withdraw the 11 in that scenario.
Okay, so it's actually an asymmetric add.
Yeah, exactly.
Actually you experience much more impermanent. It's not even impermanent loss. It's yeah. So I mean, you're taking a lot more risk than a dual LP, really.
You're taking a different risk than dual LP. So
yeah,
you're taking the Rune side of it, which is a directional bet that it is a directional bet.
You're making a directional bet. You're not okay. Is there any reason why it's done that way and why it isn't done in a way where you can withdraw basically your equivalent LP position back in Rune? That seems to me a little bit, I think users might even prefer that.
Explain what you mean by that, because you do withdraw in Rune. So you deposit in Rune, you withdraw in Rune.
Yeah, so you deposit in Rune. So in this example, I deposit 10 Rune, but I'm getting back 11 because Rune went down, right? So I get more Rune back.
Yep.
So in essence, I'm taking a directional bet. So if on the other hand, how would I do this example?
So if Rune goes up, then you could be withdrawing 9 or 8.
Right, exactly.
In that scenario. Because in a dual LP, you're always selling the stronger asset and buying the weaker asset. So if Rune is outperforming, then yeah, your LP is selling the Rune, and you could be withdrawing less in that scenario. And I think, yeah, I mean, I totally see your point there, and that's why I definitely encourage people to definitely understand how dual LPs work before entering into something like this. But then also just considering that. So while it is a directional thing, I think a little bit, you're earning fees the entire time. So that kind of creates this buoyant effect on your position where you are, there is price exposure, obviously, to a bunch of different assets, especially Rune. You're always earning from liquidity fees, which attempts to bring up your principal too. So it is, I think, somewhat directional, but at the same time, duration matters a lot here. Where yeah, short term, there's going to be a lot of fluctuations, but like long term, you're always earning from liquidity fees the entire time.
Okay, for sure. So it pretty much answers my question. I was just wondering if it was more dual LP, like the way you think about it is dual LP or asymmetric ad, which yeah, that answers the question. And
yeah,
then
it's basically an asymmetric ad, but you're just in
yeah,
10 different pools rather than one.
right. Okay. And then my second question is, did Chad officially leave or
No,
will he
Chad's
come
just
back?
taking a break. He's got
Okay.
personal stuff going on, and he needs time to sort everything out. So Chad will be back when he's back, and definitely we miss him. We want him back, but he's not gone for good or anything. He'll definitely be back.
Okay. Yeah, I guess my reason for asking is like it seems like THORChain's kind of taking a more like we're going for the memes and chaos thing to generate hype versus I think under Chad it was a little bit more not really under Chad, but like during these spaces we would be more talking about like how to improve the protocol so that it's just better and not necessarily like in a meme oriented way.
Yeah, well, that's the difference between Chad and JP. And obviously, neither of them are even leading the project. That's really under the direction of the nodes and Nine Realms, who's doing all the developments. Nothing's really changed in the back end. It's really just like the voices that you see. Because a lot of Nine Realms like chooses to be silent or doesn't say too much. Or we do these spaces, but I also do them less because I don't have anyone to really do them with regularly anymore. So that's kind of what's been going on with the spaces. I really like doing them with Chad. And I love talking with the guy, and he's obviously got a lot to say. So I don't really want to bother like Pluto or all these other guys to like come on weekly or anything like that. But that's kind of where we're at with the spaces and everything. But yeah, nothing's really changed in like the back end of back ends. We're still chugging away, shipping. Everything business as usual. And JP just kind of does his own thing, and then just when he gets ideas, and then tries to campaign for them, and we either go with him or not.
Yeah,
Cool.
I was gonna say like there's no like the protocol decided to do anything, like there is no protocol. Like it's literally just people campaign for things that they want to do. And so if JP's feeling like, energy behind the memes and he's he's able to do anything that he wants. He's his own person, right? Just like I'm my own person, I can really do whatever I want. There's no, I only answer to one group of people, and that's the node operators. Because they're ultimately the ones that decide and vote on things, and they listen to these spaces, whether it's anonymously or pseudo anonymously. Like they're giving their input through Discord and through Make Relay, and so it's like we're also taking our a lot of feedback from integrators, so the actual users that matter the most, which are the ones that bring the users and the swappers. So like we still got our finger on the pulse. Like I haven't posted any fucking memes. You know what I mean? I'm not a meme person. That doesn't mean that like THORChain has decided to post memes. Like no, it's just JP decided to post memes. If you see JP as being synonymous with this project, then that just means that you aren't paying attention to all the other people who make it possible. So it's just that he's it's like anyone can choose to stand up and be a loud figurehead for anything, and it doesn't mean anything has changed about the protocol. The protocol changes based on the lines of codes that ship and the votes that the nodes make and the policies that they enact.
Okay. Yep. Thanks for your time.
But yeah, I only caught the latter end of that. But like the question is like if could we be doing more of these spaces? I definitely hope that we are doing more of them. I really miss doing it. But again, yeah, it's really hard. Like time is short, and we want to make the best of our time, and so maybe we could try to do something monthly. I think that would definitely be better than like not at all for 6 months, right?
Yeah, I mean, no, we've definitely done more than zero over the last 6 months. Honestly, I just need someone to do them with. I'll do them, but I need a someone else to be on with me. Chad loves to talk, which is absolutely great for someone going on a space here. So Chad Thoreau's kind of taking his own hiatus and stuff. So if anyone wants to do these with me, just hit me up and we could host something. But obviously, you gotta like be up on the pulse and really know what's going on. But yeah, we could start hosting these more often. If anyone actually like really wants to start co-hosting these or just doing them more often, definitely just hit me up and maybe we can start planning some more stuff.
Let's go. Let's do like a weekly thing, maybe.
Yeah, weekly is too. It's too often for me. I'm not going to join weekly.
Yeah, weekly is intense.
Yeah.
Yeah, we did it for years now. But what's up? What's going on with you?
Oh yeah, I was just curious. I just had like a bit of a smooth brain question. Probably. I know you guys said that the timer resets obviously every time you enter the room pool position, but like however much back to 90 days and then 30 days probably down the line. What about if you're exiting, like if you're trying to exit just partial, like if your room pool position is in the positive and you're just trying to withdraw like some profits, but keep most of it in?
Yeah, you're good. You can just exit and then it just automatically withdraws. There's no wait. It just goes right to your wallet.
I could withdraw
No.
after that, like immediately, like the next day if it pops again, like ruin value. I could like withdraw some more profits the next day.
No. It's based on the last deposit height. So as long as if you're 90 days from your last deposit height, then yeah, you can withdraw one day and then you can withdraw more the next day and one the next day as long as you don't deposit again.
Okay. Yep. All right. Sweet. That answers my question. And the other like small question I had was, and this is probably just I probably just like I didn't read the docs enough for some shit, but like when I look at the like stats for RunePool just on like THORSwap, there's like some of them are like there's 3 lines under the information pop up, and like one of the lines is positive that's like related to my own personal position, and then 2 other ones are like in the negative, like minus 700,000 or minus 500,000 rune. Are those like talking about the pool as a whole as opposed to my personal position?
Yeah, so what that means is that the protocol owned liquidity is in the negative, and there's a reason for that, and we changed the behavior like about 8 or 9 months ago to make it so that it wouldn't go into the negative like that. So basically, the old behavior of protocol owned liquidity, and I think this is in one of the quarterly updates that you could probably go back and find. But basically, the protocol owned liquidity would withdraw its liquidity when the synth utilization hit a certain point. So like TLDR, what that means is that the POL would deposit and then it would be like, it would get a bunch of impermanent loss. And then it would say, all right, now's the time to withdraw. And it would just realize a bunch of losses where the whole point of, IL is that you can stay in and keep earning fees. And then eventually things just kind of go a different direction. So basically the POL position realized, like it deposited a ton of Bitcoin. It had a pretty sizable Bitcoin deposit, and then had a bunch of IL back when the run up happened, like last October, November, and then it just withdrew its entire position, basically realizing like quite a just losses on IL basically. So we changed the functionality to basically not to never withdraw, but to be much less sensitive to when it withdraws. So it withdraws at a much later time than it currently does. So its behavior should be a lot more aligned with the protocol. It basically never withdraws at this point, and it hasn't withdrawn since we changed the behavior. But yeah, that's kind of what's going on with those numbers.
All right, sweet. I appreciate it, and I'd love to actually like join those spaces more if you do get to do them more. I don't know about co-hosting. I might need to catch up on my knowledge and become less smooth brain for that part, but definitely would be interested in like being like a regular like visitor and everything. But other than that, that's all my questions, and I appreciate you guys' time.
Cool.
Sweet. Julia Eagles. What's up, guys?
Hi, can you guys hear me?
Hey.
Hey, thanks for having me on, and just want to start and say thanks for all the work you guys are doing on the protocol. It's really awesome. You guys make a lot of strides. And I echo Eric Voorhees when he was stating that like THORChain is one of the most exciting innovations in crypto for me in the last like 9 years. So yeah, I think it's really great for empowering people and giving people freedom. And that's part of the reason what the main topic I want to talk about is ADR 18. So I think like the protocol has done a ton of work to ensure that the swapping part of the equation is really decentralized and robust and immune to like adversarial or state level actors. And my concern with ADR 18 is that this creates like a big risk of centralizing pressure on the development side of the project. And so, yeah, that's my big concern. And since it's, since I've read it, I've been like just really imagining a lot of scenarios that put up a lot of like warning signals to me that would result in a situation far down the line where we are having like a one development team under Nine Realms completely. And again, that's anything to do against Nine Realms, because I appreciate what you guys do. It's just the fact that, like, in my vision, if the swapping side of the equation is very decentralized, we should also be pushing for a very decentralized development side. So yeah, that's my concern. Maybe you guys could talk a little bit about it, and maybe I could also elaborate on some of my concerns, because I've wrote a lot of those out on the Discord, but didn't get a lot of feedback on some of the points, or I'm not sure if a lot of nodes saw all of the points.
Yeah, no, we read your stuff on the Discord. The vote is underway right now. So, I mean, the commentary period has ended for the ADR. If you want to keep talking about it, I'd suggest, discussing in the Discord. I don't think this is the appropriate forum to do that, but you're free to get up on your soapbox. But I don't really have anything else to say about it. It's all been discussed to death. I mean, we've been discussing it for almost a month now. But yeah, vote your conscience, node operators.
Okay, thanks. Then my only message would be to the nodes that they really consider what it would bring, and I don't think it would be bad in the short term, but maybe as a community we should consider, figuring a way to really broaden our development talent, and that doesn't mean Nine Realms goes away. It just means that we have a deeper pool of developers to pull from, and that just makes the protocol more robust. So yeah, thanks. And yeah, maybe I'll write some more stuff on the Discord. Appreciate it.
Sure. Thank you.
Cool, guys. Anyone else have to say anything? Also, just going off of like one thing that you just said, I am also super excited about everything that we're building here at THORChain, and like it always just feels like there's so much surface area and just so much more that we could be doing to just create the best product here and really just be making what is the decentralized version of Binance or Coinbase. And there's definitely no shortage of ideas, and I think that everything we're doing is just all going towards the right direction of just making this the permissionless backend liquidity for all of crypto, right? So I mean, I think we're slowly getting towards that goal, and this thing is gonna, like JP said, this is a multi-cycle effort. Already has been and will continue into the future like that. And all of us have super long time horizons in really proliferating that. This is a long game that we're playing, and our thesis is that all liquidity is going to be moving on chain and cross chain, and we are the Pareto dominant DEX right now, and we can continue that in the future. And I think we're well on the pathway of doing that. So yeah, also just super excited about getting into the future there. All right, one last question from Surge Flow, or our wizard, if you just unmuted. What's up?
Yeah. Oh, sorry. Who do you want first?
But our wizard, real quick.
Okay. So with savers, like when you deposit a Bitcoin, right, half of that gets sold into Rune, and then you basically effectively own that LP position. So you don't have to worry about directionality. Essentially, you're just hoping yield outweighs the impermanent loss. Is there any reason why it wasn't considered for RunePool to be the same way? I must have missed like all the Discord stuff, but like to match, instead of for that guy who's depositing the Bitcoin into savers, why not match him up with someone who's putting in an equivalent amount of Rune on the other side, and then you don't have any of the issues with the leverage of savers and any of that, and they effectively share that LP position, and now the guy that's in the Rune pool, like this hypothetical Rune pool, doesn't have to worry about the directionality of an asymmetric ad.
Yeah, we've kind of discussed some things like that before. The thing is with dual LP, a lot of the time, like there's one person that wins and one person that loses. Like as in, if you're looking at from one side or the other side, you might be up. Say it's a Rune Bitcoin position. You could be up on Bitcoin but down on Rune, and then really it creates a lot of complexity around like also withdrawing. Like you need to make sure that the person that matched also has the same time horizon. Like there's a lot of additional complexities, and essentially with RunePool and Dual LP, what they're doing is they're ensuring that the principle for savers. So it's sort of what you're saying, where they are the other side of the savers position, and also earning most of the yield, might I add. Like right now, like between 99% of the yield and 90% of the yield, which is like almost all of the yield is going towards dual LPs right now, just because of the way the system works. So it sort of is what you're saying, where you kind of are taking the other side of a savers position right now anyway, being a
Well, I mean,
dual LP. Yeah.
not exactly. Well, as a dual LP, yes, but it's not exactly the same as the RunePool the way it's currently implemented, because you could still like gain a lot of Rune or lose a lot of Rune, and you don't really like. It's not really. You were talking about how do we get a ton of people to join the protocol and to turn this into a huge protocol. But I feel like if there's something more similar to Savers, where it acts more as an LP position, dual LP position, rather than asymmetric add, you'll just get so many more people and so much more volume.
Right, and that's what bonding is.
Yeah. Well, it's also the POL is already a dual LP, so RunePool is already participating in a dual LP. There's no asymmetric.
It is, but the user doesn't get the benefit that the POL does, and it's like a different risk. The user doesn't get the same risk as POL.
No, it is exactly equivalent to POL. Like so, when you're in RunePool, you are equal to POL. There's no difference between a RunePool position and POL. You earn or lose exactly the same.
Yeah, but let's say Rune goes down a lot, you gain a lot of Rune, right? And then now you just have a ton of Rune. Or if Rune goes up, you don't, like, essentially you're expecting Rune to go up when you're holding Rune and you're putting into this protocol. But there's a situation where Rune goes up and your P&L doesn't go up by that much because you don't have the dual P similar risk profile.
Yeah, it sounds like either bonding or auto bond, or just running a validator would be a better, more what you're looking for. There's not a way to provide Rune on Rune yield without being subject to impermanent loss.
For sure, but like I guess all right. I just last comment.
Yeah, the thing is, you need someone to back it, right? And that's dual
right.
LPs.
The way to do it is to match whoever wants to throw Bitcoin or any other asset into the pool with your Rune, and then you share that LP so that you basically have an LP position instead of like an asymmetric add position. But
that was floated, like I was actually the one that floated that like maybe a year ago, and it didn't take off, like with various with various contributors, and I think both Chad and JP did not like that idea for whatever reason.
Wow. Okay.
Yeah, no, I floated that. It's done. Like this is what we're doing. So yeah, I mean that's kind of the idea with Savers POL match. But yeah, you're right. You're technically what's happening is Savers are like what will happen is that like instead of selling half of the Savers asset to selling Savers half of the Savers asset to mint the synth that goes into the savings vault, that will just come from POL instead. So POL will match that, and so it basically it creates a net zero change in liquidity in the system. But you're right, the Rune pooler is still subject to just the it's just the Rune side of the dual LP, and Savers are subjected to something completely different, which is just basically dilution on the synth itself. It's very complicated. I personally don't like it, but it's where we are.
Let's do one more. Surge.
Hi guys, can you hear me?
Yep.
Hey, perfect. So I just want to, give a shout out to THORChain in general. I think you guys are doing like a really great job. One of the things that got me into THORChain is the lending feature. I think the lending feature was really big, and I know I'm not the only one, but I know there's a lot of people that are really looking for some type of lending feature, especially if it's decentralized, like THORChain. So I'm just interested in like, are there any ideas bouncing around in like expanding that? Because I know that for sure the lending feature will definitely attract way more users into the space.
Yeah, so JP actually put up a proposal a couple weeks ago about uh, a new type of lending, primitive, which would basically use trade assets rather than the current system, which is derived assets. There's definitely no discussion around like expanding the current lending feature than as it's scaled already, and just like letting this play out and just see how it works. But there is a proposal for lending using trade assets, which essentially would be like Aave style loans where you supply one asset and you can borrow whatever other asset, and there's some kind of interest rate that you pay. So it would be, I believe it's also no liquidations, possibly. I'm actually not sure about that. I haven't read the design in a bit, but there are some proposals around, adding new lending primitives, things that could always be on and have a proven, business model around that. So yeah, that's definitely something that people are thinking about. I think that's a little lower in the priority list than like considering all the other things that we have going on, like new chains and new features, auto bond, and all the things around improving like what we already have. But it's definitely something that people are thinking about.
Yeah. I just think from a marketing perspective, like obviously I know you guys want to build slowly and build it right, and take your time and everything, but just from my point of view, the marketing perspective, like what got me into the space was definitely the lending feature. I didn't even know about the swaps until after after the fact, and now I'm doing swaps, now I'm doing LP and all this other stuff, but I'm just telling you, like, from a marketing perspective, from like a regular user, the lending thing really got my attention, and I know there's like, in terms of users perspective, I think priority wise, lending would definitely be a big thing, especially like if we do have that big bull run that everyone's expecting, like, next year possibly or whatever. um, a lot of people are not going to be wanting to sell, or even probably swap. The first thing they're going to be looking for is like, where can I, lend against my Bitcoin or Ethereum or whatever. Uh, but yeah, like either way, good job, guys. Like I love THORChain in general, but it would be great if this can be maybe moved up in a priority list. I know for sure. Like more users will hear about it through lending more, rather than through swapping or anything. But yeah, that's just my 2 cents.
Cool, man. Appreciate it.
Thanks, guys. All right. Yeah, it seems to be everyone that came up. Thanks everyone for showing out to the spaces. Yeah, we can try and get these going. Yeah, whenever we have interesting stuff coming up, yeah, we'll definitely let you guys know. As for like events, we're going to be at Token 2049 in Singapore. So if anyone's going to be there, definitely hit us up. I should be there. I think JP will be there, probably giving a talk or something. And then also Binance Blockchain Week, we're 100% going to be at. And that's at the end of October 30th and 31st in Dubai. So yeah, we'll be around. We'll be doing spaces, and yeah, guys, thanks everyone for showing up. Thanks, Pluto.
Sweet. Yep. See you later.
Peace.
Bye, guys.